We have had a couple of questions about banking, actually. We may have covered some of these points already. First one is, someone just outlines the point that the sector feels incredibly lowly valued given the rate environment, even accounting for provisions and growing political risk. Is that something you guys would agree with, or do you think there is kind of justified caution from the market?
I mean, I can mention that we added a bank to the portfolio reasonably recently, actually. So I'd agree with the tone of the question that the headline multiples are certainly very very low. And going back a bit, I mean, we talked about the states and quality and things like that and what's driven the market historically. But I think going forwards it will be different. What will drive markets? I'd be very surprised to see a repeat of the last 10 years when it's been driven by the United States and big cap tech. At Brunner we have a process that really looks to marry sort of quality, valuation and growth and come up with a sort of balanced all-weather approach. And yeah, we do have some banks in the portfolio. I think because of the point that the question asker makes. I think banks, it's very hard to say any bank is a sort of really good quality business, and to sort of start off by saying that.
Is that just because of the kind of cyclicality, or?
I say, yeah, I mean the record of value creation. So coming back to the points on returns on invested capital, banks don't make a very high ROE, compared to their cost of capital, across the cycle. So they don't create huge amounts of value, and then it's cyclical. And then as Silicon Valley Bank showed, there's always the tail risk of bank runs, and that you get wiped out as an equity holder, and that's pretty much impossible to legislate against entirely. So that's always a sort of tail risk. Obviously not saying that's going to happen, I think, anytime soon. It's a very rare event, but it can happen, and it's a useful reminder of the fact that a bank is inherently quite risky. But when we do our calculations, we look at some banks, and the amount of cash that they can throw off over the next 3 or 4 years is extraordinary. I mean, it really is, in the context of their current market cap. Banks haven't been a good investment for 10 years, largely I think because they've in the UK, for example, they've had to recapitalize. So after the crisis, they had to just all banks globally had to put aside much more capital to protect them. That was very costly. That's just cash basically going towards the capital base as opposed to shareholders. But now, the banks are far better capitalized than they have been in history, which in theory makes them safer. And it also means that now the capital levels are a lot higher. More of the internally generated cash flows can be returned to shareholders as dividends and increasingly as buybacks. I think because of the political controversy around banks, it's probably going to be more buybacks because they're a bit more, less sort of visible, I think, in a way than dividends.
Less politically sensitive.
Less politically sensitive, yeah. So I think if you have extraordinarily high dividends from banks, that's going to get the attention of policymakers. It might draw some unwanted scrutiny, whereas buybacks are another method of returning cash to shareholders that are a bit more nuanced. But yeah, the bank sector, I think we're probably at or around peak. The very cyclical, very low growth, probably at or around peak profit. It's probable that credit costs will go up. If we head into a downturn. Then you mentioned the net interest margins. This is the core of how a bank makes its money. It pays its depositors X and then it invests, loans at Y. That spreads probably at or around as high as it will get. So we're probably at sort of peak profitability. But nevertheless, yeah, the amounts of cash that some banks can throw off, at the moment is the highest that it's been for a long time, coupled with the fact that these banks have generally recapitalized to an extent that they're far less levered than they have been in the past. I think they're better quality than they have been at the past. They're probably less risky than they've been at the past. So yeah, banks are an area we have some exposure to. We don't avoid in their entirety, and we think in selected opportunities offer pretty good value right now.